Turnover growing some 50% last week. Foreigners, we're seeing them back in the market, back buying Kenyan equities. It seems that on the equity front, Kenyan investment has become more attractive.
I think so. I think with the shilling at hovering around 100, it's become very attractive to foreign investors. And we were in a very oversold market. It was actually trading pretty thin. And we've seen some good volume buying. It's quite counterintuitive given our excursion across our border, the first one since the 1960s into Somalia, the potential blowback asymmetric risk, the tightening that's coming today, which I estimate to be at least 300 basis points. But, you know, we were looking at a very deeply oversold market, and we're now coming out of that disequilibrium. I still think it's got a little bit more energy and can do another 5 to 10%.
Now, we've had strong results continue to filter through, especially from the banking sector. Housing finance being the latest financial institution to report 63% rise there in net profits to 407 million shillings. That's for the first 9 months. Its mortgage book is growing. The question is, how sustainable is this growth in its mortgage book in light of the rising interest rate environment?
I think there are two issues around housing finance. One is the cost of deposits. I think I'm already noticing there's been a significant uptick. You know, the money market rates, the central bank is draining money out of the system at nearly 20% or just above. So the cost of money is going up considerably, and I think that will obviously impact housing finance going forward. And really, you don't have to be a rocket scientist to realize when a mortgage rate goes up from about 13-14% to around 20%, it's going to cause some problems with the borrowers. And I think the real estate sector is the one sector that's actually going to feel the pinch and the squeeze from this tightening cycle that we're witnessing now.
And interest rates have risen quite dramatically in such a short period of time that it will be quite a shock to those who are paying off those loans.
Absolutely, and all the anecdotal evidence I'm getting is that there has already been some deterioration in the real estate loan books. You know, we had a huge boom in the real estate sector with a lot of mom and pop developers who were just handing in the land as the collateral and then leveraging themselves. We're going to see, I think, a significant slowdown in the real estate sector, which has been a sweet spot for more than 10 years, essentially.
Now, housing finance are also looking to access longer-term financing, perhaps issuing a 25-year bond. Interesting that they want to come to the market, issue longer-term financing when yields are so high, and the central bank's not even issuing paper at these levels.
I agree with you. I think what they're trying to do is lock in funding and saying to themselves that, you know, at those long-term loans, they can make some long-term loans against that bond. As an investor, however, I think I would like to be buying long-term paper. Everyone's obsessing around the T-bill rate, but I think we're going to plateau pretty soon on the inflation rate. The rains are better, energy costs will come down. I think we're near the top, and I, for one, would be taking a long position in longer-dated government of Kenya paper, and that's where I'm looking at the moment in the bond market.
That's what some other traders have said. You know, how sustainable are the yields on the short end of the curve? Let's just talk about the MPC that's taking place today. What are your expectations? What type of rate are you calling for? Another rate hike? I mean, the last rate hike was quite aggressive, but most are saying that we need anywhere between 100 to 300 basis point hike once again.
I'm erring now to between 300 and 400, and I'll tell you why. One, I listened to the interview you just had with the IMF representative, and I think very clearly the message that I'm drawing is that there's a quid pro quo, that the government got the $250 million, and in return they're going to have to launch a much tighter monetary policy. And I think essentially we're looking on balance at probably another 400 basis point rate hike. Bear in mind that the central bank is in the markets draining cash at 20%. Therefore, 11% doesn't really make much sense. And I think they've got to go towards that mark. And we're going to see a big move again, I think, today.
On the exchange rate front, also reiterating that maintaining a floating exchange rate is the right policy.
Absolutely.
Do you agree with that?
Absolutely. I think one of the great reforms in this country was the fact that you could bring money in and take it out without much trouble. I think it would be a major step backwards if we started trying to restrict that. I think the shilling has seen its blow-off bottom at 107. Interest rates around where we're moving towards are going to be very attractive, and I think it's going to suck in a lot of cash and strengthen the shilling over a period of time. So I'm looking for 95. I think it's going to be gradual, small spikes over 100 again, but the central bank is intervening and selling dollars when we're popping above there. And I sense that we've now got enough firepower and bullets to keep it strengthening gradually towards 95.
Well, Aly-Khan, you seem confident. The IMF seems confident. So that's a good note to end off on. Thank you very much for your time today.
Thank you.
Aly-Khan Satchu, CEO of Rich Management.